All right. How you doing, ladies and gentlemen? Welcome to another edition of Bulls versus Bears, the weekly Forex forecast. So glad for you to be here. My name is Dr. Gregory McLeod, and I'm from the Elite Traders University. I'm the CEO and founder of the Elite Traders University, and we help traders become profitable traders in 90 days or less using our proprietary trading strategy, the Pip and Run strategy. We also help traders trade gold, silver, different commodities and stocks and options as well. So welcome to this week's broadcast. We didn't have a session last week because of the we took a week long Thanksgiving hiatus holiday to recharge and regroup and rejuvenate, and we're back in the saddle with the month of December, starting our first show of December. I hope you had a great Thanksgiving, and I'm glad that you've rejoined us. And you saw November was exactly as I had spoken, that in the equities market, November is traditionally the strongest month for the stock market and for the risk on currencies. We also saw on the last day, we saw gold approaching the 2078 mark, basically going back to 2022 highs that we have not seen in a very long time. And it looks like a quadruple top on gold. We'll talk more about that in Bulls versus Bears. But before we get started, I want to go ahead and share my screen. Let me go ahead and do that for you. We'll share screen two. And we'll go ahead and share maybe some sound. And we'll go ahead and do that. Okay. So fantastic. And we'll change our view to the reading view. You can tell this is live. It's not recording, right? And hello, howdy do to all you guys out there on YouTube. We're actually streaming this live to YouTube, so you may be able to watch and respond. And hopefully you're watching, taking notes. Okay. This broadcast is brought to you by EliteTradersUniversity.com. If you want to go to EliteTradersUniversity.com to find out more about what we do, there's lots of free resources to help you become a better trader and benefit from my 30 years of experience in the trading industry. I work for one of the largest Forex broker dealers in the world. I was a currency analyst, currency strategist, and a trader mentor, trader coach for one of the largest broker dealers in the world, and also worked for a top tier bank and worked as an advisor to other brokerages around the world. My material is still being used by brokerages to train students and other traders. And so that material is still being used on the internet. I have one of the longest social media presences on the internet. And I've been doing this for a very long time. And I've been helping thousands of students around the world become successful traders. Okay. So go to www.elitetradersuniversity.com to find out more. And also take a look at a free masterclass, a free ebook, and see if it's a right opportunity or fit to work with me. There's a free breakthrough strategy call where I'll talk with you, find out about your trading. The call's absolutely free. There's no charge. We're just going to see where you are in your trading, maybe do a local trade audit, analyze your past trades, and give you a prognosis or a path forward, a game plan to move forward in your trading. So if you've been going around in circles, then you probably need to ask for help. Don't be the guy who doesn't ask for help and keeps getting lost. Okay. Anyway, weekly Forex forecast, Bulls versus Bears. Again, so glad for you to be here with me. And hopefully we're making sure I'm sharing my right screen. And I'll you share, make sure I'm sharing screen number one. There we go. Screen number one. Okay, fantastic. Bulls versus Bears weekly Forex forecast. Yeah, I'm just showing the wrong screen. Okay. No, I was showing the wrong screen. We're showing the right screen now. Okay. No worries. Okay. So I'm going to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. And I'm going to show you some past performances, not indicative of future results and all that stuff, right? Now, I've been doing this for going on 30 years. And it's been an absolute wondrous ride, a lot of ups and downs, but more ups than downs. And I'm one of the foremost authorities of short-term day trading, known as scalping. I've traded everything from gold, silver, oil, and Forex. I trade mostly Forex now because I like trading 24 hours a day and like the liquidity that I get. But I'm also the creator of the Pip N Run system. I'm also a creator of the King Midas gold system and the Gold Rush blueprint. I can add to my repertoire of trading tools, which I've developed to help traders to use, and along with my market heat map, which I'm very proud of as a software as a service. It's one of the #1 technical analysis trading tools used by traders around the world. And I'm so proud of that. The work that we did there. Anyway, moving right along. In fact, our Gold Rush Blueprint class is very in hot demand right now, with gold breaking into new 4-year highs, new 5-year highs, new all-time highs. We have not seen this price of gold ever. Yeah, I think you got to go back to the 1960s. Gold was like $32 an ounce, and now it's at 2,000. Over 2,000, 2,078, 2,074, around that area. And they're closing in on 2,100. And I forecasted that. I was talking about the fundamentals, and that's why we were rolling out this course now to be able to help you guys learn about trading gold. Remember, we're getting closer and closer to a digital dollar. And if we have a digital dollar or a central bank controlled dollar, Forex trading as we know it may change forever. I'm not saying that will go away, but if the central banks control the dollar, they can manipulate the dollar. And that's why I'm pushing gold trading, because if anything, we can trade on the futures market and we can still trade gold. And so I'm looking gold as not only as is at a critical point where if the dollar drops precipitously, which is forecasted by the bond market, that we could see the dollar drop down below into the 90s or in the 80s, and that would spark another round of inflation, and then we would have actually have the gold as a store of value, as a hedge against inflation, and we could probably see a speedy move up to $3,000 an ounce. So I'm looking at, in the Gold Rush Blueprint, we're actually talking about not just trading gold electronically, the spot market, the futures market, ETFs, gold mine stocks. We're also looking at taking delivery of physical gold and using that as a hedge against whatever may happen, black swan event that may crash our financial system. And so you can, if you use your phone, you can go ahead and use the QR code on the screen. Go to bit.ly.com Gold Rush Blueprint and check out my free course. I've made it very affordable for anyone to learn about how to trade this ancient and most precious asset, gold. All right, moving right along, let's go ahead and look at our agenda. We're going to be looking at the dollar index, euro, pound, Aussie, dollar, yen, dollar, CAD. We'll also recap some of the gold. In fact, we had a gold seminar and very well attended. This Saturday at noon, we had a lot of people who attended and learned a lot. We dropped some serious golden nuggets on them as well. So let's go ahead and get right into, we're going to start with the economic news and the financial calendar. And let's go ahead and see if we can get into that. And I have to bring this over. Wrong one over. Yeah, we can. We can close this up or move this somewhere else, and then we'll bring this over, and then we're going to go here. We're going to go right into the My Market Heat Map. My Market Heat Map is an arrangement of currency pairs by percentage change. It tells us what's happening, what's popping, what's dropping, what's not in the market in a convenient graphical display that's also available on in the App Store and the Google Play Store. But if you want to unlock all its goodies on it, then you want to buy it here and then use your login to open it up on your phone or use it on your desktop computer. And you can also use it for free. Just to go to the homepage, we give you one of the 6 powerful heat maps, the Forex majors, and we have an economic calendar in the front. You just got to kickstart it with a refresh. You give it a refresh and you click show more. We can look at the economic calendar right here. This is an economic calendar for this week, and this week starting Monday, December 4th. We have the Euro balance of trade that's going to come out. And so we're the way we use the economic calendar, for those of you who are maybe brand new to bulls versus bears, the flags, they call it fund with flags, not fun with flags. Like in that show that you see on the Big Bang Theory, you have Amy and Sheldon Cooper. They have an internet show called Fun with Flags, and they dress up in the country's costumes, and they talk about the flags. Well, here I call it fund with flags, where we actually make money by looking at the flag of the country and looking at the news. And now we know what to trade, because that's where the activity is going to be in the market. Not that we're going to trade the news event itself, but there's going to be a lot of activity around the currency which has major news around it. That's why we look at the economic calendar. The economic calendar is like a playbook. It tells you exactly what is going to be traded. Right? We have the German flag, and this in the Eurozone. So the euro is going to be in play. So we're not going to trade like Canadian dollar because we don't see a Canadian flag. So it's just very simple. No, I don't know what to trade, Greg. Well, look at the flag, right? And the flag is a German flag. So we're going to trade the euro. And so what happens here in these numbers is really of little consequence, what we want to know is what is going to be traded. So we want to look at the euro on Monday, December 4th. And also we have the Swiss franc CPI. Swiss franc is going to be in play. And on Monday, also the Australian dollar. And really, this is a very high impact item to trade on. The Reserve Bank of Australia, that's what RBA stands for, Reserve Bank of Australia. And they're having an interest rate decision. Interest rate decisions are some of the biggest drivers of Forex or currency movements, of market movements, right? Non-farm payroll is like the number one, and then central bank interest rate decisions are like number two, right? I mean, they're almost like number one. They're like both kind of synonymous. I mean, but I would probably edge out NFP over central banks, right? Because NFP affects all currencies, while the RBA rate decision might only affect Australia and maybe New Zealand. So they're looking at keeping rates unchanged at 4.35%. And so we could see the Australian dollar, be very, very active around, that's about 10:30 Eastern time, right? So that'll be later in the afternoon on Monday. Now, on Tuesday, we're going to move around. We have a French flag, which is still part of the Eurozone. They use the same currency. They don't use a French franc anymore. They use the euro. They use the European, the euro is the central or the one currency for all those nations. And there's a HCOB service PMI final that comes out. 45.2 was the previous number. We look at forecast of 45.3. Okay, so the euro is going to be in the full effect because look, we got Monday, we have data, we have Tuesday euro data. So this is like the euro. The euro is going to be really majorly in play. So we want to put the euro on our watch list, or even euro currencies like euro yen, euro CAD, euro Swiss. Okay, and now we look at 10 o'clock. There's a 10 o'clock US news cycle. We have ISM Services PMI. PMI stands for Purchasing Managers Index. Okay. And they actually survey these purchasing managers and say, hey, are you buying stuff? No, I'm not buying stuff. Are you buying stuff? Yeah, I'm buying stuff. You buying stuff? I'm not buying stuff. So they count how many people are buying stuff or how many people are. Because if people are buying from you, you buy more raw materials to make more stuff for them to buy. But if no one's buying stuff, then why would you buy any more raw materials? Because it'll just sit up on the shelf, right? So Purchasing Managers Index is like a leading indicator on the economic growth. So look, with 51.8, are you going to buy stuff? Well, the forecast call for 52. If we see a higher number, then that's going to be a good number. Now, in this scenario, we've been seeing bad news is good news and good news is bad news, okay? Because the Fed, if they see good economic numbers, it means that they have to keep interest rates high. And high interest, nobody wants to pay high interest rates. No one wants to pay higher interest rates for borrowing to expand business. No one wants to pay higher interest rates for credit cards and things like that. Higher interest rates slow down the economy, and that's what the Fed wants to do. So if they don't see things slowing down, they're going to raise rates even higher. So that's why good news is bad news, is that if this comes out a very positive number, we could actually see the stock market and the risk on currencies, the bullet would actually drop if we have a good number. If we get like 49, a bad number, well, that means that the interest rate rises are working. They're not ordering anything because no one can buy anything because everything is still too high. So that creates this cycle. And so bad news would cause, we're not going to hike rates because look, the rates are slowing down the economy, and we'll see the stock market rally. We'll see the Aussie and the euro and the pound all go up on bad news. You're going to wonder why. You're going to be sitting in front of your computer and why you're getting a big spike up at 10 o'clock a.m. And that is why. You said, well, the news is bad, I'm going to go short. And you go short and you get crushed, right? But remember, we trade currencies versus the US dollar. So actually the dollar is going down, right? So that's the paradox of this. Adults job openings, that's another one. 9.553 million jobs to 9.35. If we get a drop as forecast, that could also be bullish for the euro, which is the anti-dollar, right? It'd be bullish for the pound, bullish for the Aussie, right? But if this is a higher number, well, then that's not good, right? Good news is bad news, right? It means that, we have all these jobs, we need to raise rates even higher, and higher rates. The market does not like high rates. Here he is at 1930, which is, it's 24-hour clock, just subtract 12, it's 7:30 p.m. The Australian dollar, you see the Australian flag, lots of Australian flags. So guess what? The Aussie is going to be in place. So you want to put the Australian dollar in your watch list along with the euro, right? So we have Aussie GDP chain price index quarter on quarter, negative 2.2%. They didn't even bother to give a forecast. They probably don't want to even guess and get it wrong. Okay. Now around the world, these numbers, good news, maybe, good news for their economy is probably good news for their currency. US is a little bit different, right? But you can basically, all we know for sure when we look at the economic calendar is that I see the flag, and that's what I want to be trading. I want to be trading Aussie something, Aussie dollar, Aussie Swiss, Aussie Kiwi, Aussie yen, right? I'm not going to be looking at CAD Swiss. Well, CAD Swiss is my favorite currency, and I'm going to trade it. Well, guess what? You're not going to make any money because no one else is going to be trading it but you. Why? Because the flag says Australia. Okay. Look at the flag, right? So if you ever traded and not have anything happen because, man, I'm trading this currency and nothing's going on, probably because there's no news around it and you didn't check the economic calendar, right? Because the market doesn't care what your favorite currency pair is. It cares what it wants to care about, and it wants to care about the news. So the sooner you get on board the economic calendar, the sooner you probably start making money, right? Okay. So people, it's a very simple thing, and a lot of people don't. Well, why the euro didn't move? Because the European flag was not here. Maybe you think? Well, it can't be that simple, Greg. It is. That's why a lot of traders in Chicago don't even have sixth grade educations and they're multimillionaires, because they could follow very simple stuff. Okay. All right. So anyway, we've got a bunch of Aussie data without even forecasts. They're not even going to try to even guess what these numbers are going to be. They just forget it. The previous number is 2.4, and we'll see what happens at the actual number, right? Now, on Wednesday, we have a BOE. BOE stands for Bank of England. Governor Bailey, they have governors, like we have Fed governors too. And he's going to be speaking, and usually that will manipulate the currency or move it around. They try to what they call jawbone the market. There's different policy tools that the central banks of the world use. They can raise and lower interest rates by printing more money, or printing more money lowers interest rates, and printing less money raises interest rates. So basically, they're controlling the flow of money supply. The other way they can do it is by verbal intervention, by saying, we want to see rates higher for longer. And they go, oh, wow, he said that. So then the bond market starts reacting, right? So they call that jawboning the market. So the governors can jawbone the market and cause the rates, the interest rates to rise and fall just by having a big long speech and saying some really scary things, right? Now at 8:15, we're going to have U.S. ADP employment change. Okay. Now remember, we didn't have it last week because of the Thanksgiving holiday. And normally we have non-farm payroll the first week of the month. Well, we just had Friday, and where's non-farm payroll? It's like, no. So they're going to have it December 8th. Okay. ADP usually precedes non-farm payroll. ADP is a private payroll company. ADP, I used to work for the brokerage. My paycheck came out from ADP. Very simply, they count how many people have checks, and that's how many people have jobs, right? But they don't count public servants, public workers, because public workers like firemen and federal employees and stuff like that, they are not counted by ADP because ADP doesn't process their checks. So this number will be a little bit different. So they're looking at a rise from 113,000 to 128,000. If that is so, that would be a very big negative for the market because the Fed wants to see more people unemployed. Go ahead and go online. If you want to find out, just go ahead and you can go to any news site, or just go to Google and say the Fed wants higher unemployment, and you'll see everything. They'll say, oh, you're just making this up, Greg. Right. And you can see why the Fed is trying to slow job growth. The Fed's longstanding belief is that job market of strong hiring and increased wages typically fuels higher inflation, right? So look, the Fed wants higher unemployment, right? Look, I'm not making this stuff up. I'm showing you, if you guys can see it. This is what they want. They want people unemployed. The Fed wants higher unemployment because it would bring down inflation. All right. So you think the Fed's on your side, but they're really not, right? So 200,000 jobs, way too many. We need more people unemployed, right? So that's why you need to learn how to trade. That's why you need to go to leadtradersuniversity.com, learn how to trade, and that way you don't have to worry about anyone firing you or laying you off to support the economy, right? Or you can just say, no, take this job and shove it, and that way, hey, I'm unemployed, I'm unemployable, right? Because I'd rather have a trading account than have a paycheck, right? I'd rather have profits than a paycheck, right? Profits are better than a paycheck. Profits will set you free. A paycheck will keep you bound. So he says, hey, you want employment? Let me do my patriotic duty. Learn how to trade, and make $10,000, $20,000 a month, and you can have this job. And that way, it will go down as unemployed. And so we're doing our patriotic duty to help lower inflation, right? Not really, because you're going to have $20,000 to spend. You'll probably wind up pushing up inflation. But anyway, that's the proof in the pudding, right, guys? So they want to slow job growth so they can lower inflation. So we're going to have the ADP employment change. Now, the Bank of England, Bank of Canada, BOC is the Bank of Canada interest rate decision. They're widely expected to keep rates unchanged at 5%. Why? Because the economies of the world are weakening under these higher interest rates. We went from near zero interest rates. We've gone 500 basis points of rate increases, and it takes months. It takes several months for those rate increases to actually trickle into the market. Okay, so when they do hit, they haven't hit yet. So when they actually hit, there's a lag. We probably won't get hit by them until February. And by February, it's like, oh, okay. It's almost like, back in the old days when or even now, you press print in your computer and nothing comes out. So you press print again, you try and get this document, this letter sent out, you press print again, and you press it like 15 times, right? Nothing happens. And then you go to the bathroom or something, or go for a walk, or make yourself some coffee, and then all of a sudden your printer is like, I Love Lucy. And you're like, stop. Now you got like 100 copies of something. You only want one copy. Why? Because the buffer remembered the first time, right? So the Fed's putting all these interest rates into the system, and when they finally hit, the whole economy is going to collapse, right? And that's what the bond market is already figuring out, that you guys are going to have to wind up cutting rates in 2024. So if you're looking at refinancing your house from a higher interest rate or anything like that, don't worry, you'll have your opportunity, because the cycle repeats itself. And apparently people have forgotten that stuff goes, the pendulum swings both ways, right? You go from super high rates to lower rates. If you go too far to one side, you have to swing back until we find this normalized rates, right? Because they're trying to hit 2%. It's like, it takes 6 months for the stuff to kick in. We'll probably be at 2% or below by March. Okay, so mark my words, right? It's just, when you're old as me and you've seen the markets for like 30, 40 years, you see this stuff happen over and over again. And if you're a young kid and you're like 20, 30 years old, or, you're looking at the markets for the first time, you're like, oh, well, it's like, this stuff has happened already, right? We're in this infinite loop. We're in this constant loop that nothing has really changed. We had Middle East wars before, we had Russian aggression, everything. We've just seen the same, the Cold War in the 80s, the inflation. It's the same thing, SOS, same old stuff, different label, right? And that's the beauty of it, of having someone like me on your side, is that I have basically seen the future, and we can trade it. I've seen the future. I can trade it. Hey, okay, I get that ABC song, right? How to Be a Millionaire. Okay. And who's ABC? And okay, that's an 80s band from England. Okay. Going right along. So we have initial jobless claims. We have the GDP growth. Again, more Euro data. Euro's going to be big, very big. GDP growth rate. See, notice how we went from 0.2 to negative 0.1, 0.5 to 0.1. Things are already coming down because those interest rates are starting to kick in. And then we have jobless claims, 218 to 223. Wow, more jobless claims. We could probably see, if we see a higher number like 250, we're going to see the NASDAQ hit new highs. We'll hit back above 16,000, right? Because they want people unemployed. Remember that. Bank of Canada Governor Macklin is going to speak. So, the Canadian dollar will be tradable on Thursday, December 7th. And then we can go to Friday with European CPI. CPI stands for the Consumer Price Index. Anytime they have index or I, think of the I as inflation. And so we're looking at inflation dropping from 117.8 to 117.3, probably not enough to make people stop raising rates. 8:30, we have U.S. average hourly earnings month on month. We're looking for that to rise from 0.2 to 0.3. That would be bad. People making more money is something else the Fed doesn't want. They don't want you to make more money, and they don't want to create more jobs. Okay, so why do we need them? It's almost like, let's get rid of them, because they're not working for the people. But unless they're doing something like a Star Trek, the needs of the many outweigh the needs of the few, right? Or the needs of the many who need jobs outweigh the needs of the few. Anyway, non-farm payroll, that's what we've been looking for, right? 150,000 jobs, they're looking for a rise to 180. We see a higher number than 150 to 180. We see 200. We could actually see the market sell off on Friday, right? So don't see, it's going to be an opposite the way your brain thinks. If you think it's a good number in the past, like, before COVID or after COVID, when we saw higher numbers, it was good, right? Remember? This is almost like Newspeak in 1984 and that whole George Orwellian thing where, the Ministry of Truth, the truth is a lie, war is peace and truth is, whatever. It's always the opposite, right? So we said, oh, wow, 180,000, that's bad because poor people have jobs and the market will sell off. So if we see like 140, 110, 100, we see under 90,000 jobs, then we can see a blowout stock market. Aussie is going to rally. New Kiwi dollar is going to rally. Dollar is going to drop. Gold is going to go through the roof if we can see a sub 150 number on non-farm payrolls. And how sad it is that we have to see loss of job growth in order to see economic increase. And since there's a lot of people who benefit from this rising market, you're seeing a lot of companies like chiming in. Hey, let's go ahead and lay off, like Twitter, lay off 80% of our workers, right? Why not? Let's lay off, our manufacturing. Amazon, let's lay off our Alexa. I mean, they're laying off the Alexa people. It's like, hey, they're doing these massive layoffs. Why? Because they're going to be rewarded. Their stocks go up when they lay people off. Okay. And so I'm not saying whatever they want to do, that's what they want to do. I don't care. I'm not going to tell them not to lay people off. That's what they want to do. Okay. It's their company. That's how they want to run it. I'm just saying, for me and for the people I teach, learn how to trade so you are not at their mercy. They can do what the F they want to do, but guess what? It won't affect you because you can press the button and make money. Press the button and make money, and you never have to be a slave to anybody. And they can do whatever they want to do. Lay off whoever they want to lay off. Just press the button to make money, right? All right. Enough of that. It just makes me a little upset. Okay, unemployment rate, 3.9%. They want to see a 4 handle on unemployment, 3.9. Michigan consumer sentiment, 61.8, 61.3. The consumer sentiment, they want the consumer sentiment to be down. They want you to be sad. I remember consumer sentiment was in the 90s and hundreds a couple of years ago. Now it's like, oh, if it gets over 60, if it gets over 70, it's too high. We're going to have inflation. We got to make people feel bad. So 61, if we have an increase, that could be a negative for the market as well. Inflation rate year on year in China is like, why are we looking at China, Greg? Because we trade the Australian dollar and New Zealand dollar. Good. You remember, right? Negative 0.2%. We're looking at inflation rate to drop to negative 0.3%. And okay, their inflation is dropping, right? So that would be, I wouldn't speculate in what direction it would go. I just know that since we don't trade the Chinese currency, we can benefit from that movement of China is the second largest economy in the world. And so when they catch a cold, then Australia catches like the COVID, right? Or the flu. So anything that, if Chinese inflation goes down, and it's good for them, then that would be very beneficial for Australia and for New Zealand, right? Okay, so we covered the economics. I know I went a little bit deeper on there, but I love you guys, and I'm making up for it for not showing up last week. But last week, you know what? I'm going to take the last week off of the month in December as well, to recharge, recuperate, and also work with some of my my students, my private clients and things like that. So we will see you, after Christmas. We're going to take the week off. We'll come back after New Year's, and then we'll resume it from there. Okay. And all you guys in the gold class, I will see you as well too. So let's go ahead and get into the technicals, into the markets. I'm sharing my screen, making sure me double check to make sure that you can see me. I'm going to move my face out of the way. I can move it over here somewhere. Okay. No, I can't see my currency. All right. Maybe it was moved down here in the corner. Yeah, I'm going to be right there. All right. So we're not going to start with NASDAQ 100. We're going to start with the dollar index, DXY, baby. We're going to start with a monthly chart. Right. And we can see that, we have made some higher highs and higher lows in this monthly chart. However, something is going on. Do you see what I see? Remember that trend channel I drew the week before? Remember I said if we don't get up out of this area, that we'll be heading down. Well, that was last. And so that, look how we tagged that line that I drew, and now we're turning down, right? Let's go to the weekly chart. I'm going to get rid of the upper trend line because we ain't going up, right? This is like Jefferson's backwards. We're moving on down in the dollar. Down from that deluxe apartment in the sky. We're moving on down back to the ghetto. Finally, that's where the dollar is going, guys. It's heading down. Oh my goodness, right? Because remember that I tell my students about the alternative count. The alternative count was we could have seen a move up to the previous high. That was the alternative count. The make or break zone was to break out and go. But now, with the interest rates falling, we're actually seeing the dollar actually going down, right? And in fact, we have an RSI that's approaching. Our RSI actually is at under 50. That's bearish territory, people. That's bearish. Danger, Will Robinson. We are below. We're going below this move. We're going below this channel line, right? We're going down, and it's not looking good for the U.S. dollar. We are heading lower because why? Because rates are actually coming down. The rates, so if we're looking at the dollar is like
don't buy.
Right? Yeah, right. It's
sell.
Yeah, it's like it's going down, right? So we have a high, a low, a lower low. And now we have a lower high. What we have is the making of a downtrend with stochastic. We have an RSI below 50, which is also in bearish territory, right? And so basically, this thing is like not good at all, right? Right? We're just diving, right? Let's start to a daily chart. And you can see now we're hitting a little bit of an oversold area here, and we can see it's the dollar turning up a little bit, and we might get we have some old support back here from August 30th. I'm gonna put a little support line there. We were bouncing right off that support, so we may get a little bit of a breath coming up for air, right? And then then we could continue lower, right? In fact, we're in this oversold area. I just added RSI for you guys for somebody inquired about using RSI, and so now we're getting this area of support. We may rally a little bit, especially if we start getting this news. We start getting good economic news coming out and causing the dollar to rise, right? But I'm still bearish on I'm very bearish on the dollar. So that's my bear, right? But let's go ahead and look at. I want to take you to the TNX. The TNX is the 10-year Treasury note, and this is we can look at the value of the dollar based on the 10-year Treasury note, right? And we can see that this thing has been falling like a rock. We went from a high of 5% on the TNX, or the 10-year Treasury note, and now we're down at 4.2. Right? So there we go. We got from 500 to 420 on that, and then so we're not into bear territory yet until we cross the RSI crosses below 50, and then we could see a deeper move. But looks like we found a little bit of support. Maybe we get some type of a retracement. Rates pop up a little bit with better U.S. economic data, and then we might go down a little bit later, right? So this is the TNX, and I am constructively, we might see a bounce off this 422 area, maybe a move back up to like 4.5. And then after I move from 4.5, we could see a move lower, right? What this means is this is just a proxy for the US dollar. This coming down, and I believe that we will come down farther, right? Farther and lower, and we might even come back down to maybe, we come back maybe like to in the 2 to 3% area on that, and that would probably significantly move the dollar down. Okay. With that, let's go on to what's other. The anti-dollar is the euro, EUR-USD. Okay. We're going to take a quick gander at that. Let me move my line out of the way. We'll start with a 50,000 foot view, start with a monthly chart. And you can see that, we've been in this downtrend for a really long time. We've been rebounding a little bit of rebound with some higher lows here. And, but look at what's going on with the RSI crossing into, right at like the 50 area, a little bit higher than 50 there. At 52.84, just barely in the bullish territory, right? We haven't broken the 50-period moving average, but we were bouncing off of a trend line, higher highs and higher lows. So this is actually looking pretty bullish here. Look at the weekly chart, and we can see that we are we're getting a little bit of an uptrend here, and so we're looking for a little bit. So we are slightly bullish, right? It's definitely not. It's not a trade. It's not this high powered. It's not that, right? But it's just kind of just a little bit of a baby trend right there, right? And we look for a daily chart. Yeah, now here is kind of interesting that we are moving out to a daily chart, that we are seeing that match with the dollar rising and this coming down a little bit, right? So I'm actually looking at maybe medium-term bullish, but short-term bearish. We may get a bearish move, a retest of this trend line, coming back down to 106.24. Looks, but let us get down maybe to a 4-hour chart. Now, the 4-hour chart looks pretty tasty. We have a double bottom in RSI. We're bearish. We're below the 50 line, and we're below the 50-period moving average, but it's kind of holding its own there. And we have a kind of a long wick there. So it'll be very interesting. Not a John wick, but a long wick. And then if we can see maybe, and then price come up above that, we can see a move back up to like 109.14, right? So I am moderately bullish, but not very much. Okay, let's move on to we have some GDP. We have some Fed governors, not Fed, but from Bank of England governors speaking, and the Bank of England has been they still face some challenges with inflation, and probably they're going to probably be higher for longer with their rates. And we see that the move, we see higher highs and higher lows, nice uptrend. We have the RSI above the 50 area, so we are constructively bullish on the we're trying to draw my line, got kind of sticky there, right? A rising trend line, nice moves above the 50-period moving average. So we are bullish on a weekly chart. Go down to a daily chart. Maybe running a little bit of that juice. I mean, it's been running for several, for a month almost, right? So we might see some little bit of a profit taking, maybe a little bit of a pullback. We like to see maybe a pullback before entering. We're heading into some old congestion back here from the August area. See all that congestion? We're just right into that. So we need to break 127.75 for us to try for a shot back here at the 131.52 area, which is the high from July 17th, 2023, right? We're in an overbought area. However, sometimes the markets can remain overbought longer than we can remain solvent. So trying to short this may be difficult. So I would still be bullish. I would buy. Okay. For our chart, and we can see it's kind of a hook just cross pattern, and we could still maybe see a little bit of move, maybe toward 128 as an intermediate target. Okay. All right, let's keep it going. Let's get to the next currency pair that was on our economic calendar. We saw we saw some Canadian. It was Australian, right? Australian, AUD, USD, lots of Australian data, right? Going across there, start our 50,000 foot view, and we can see, just even on the monthly chart, and we can see that we found some support in that 62.73 area. Prices here, price here. We see multiple tries to break down below that, and the buyers just seem to step in, right? Even with some negative Chinese data, this area has held as under attack, and the attack was very vicious here, and the third attack could not even close below it, and now we've just barely touched it for a fourth time, and maybe fourth time's a charm, right? Let's ask one of Elizabeth Taylor's husbands, right? No, okay. So we've got all this support here at 62.73. Maybe we see a move back to the 69.78 area. We do have some intermediate resistance at 68.91, and also resistance here at the 71.54 area. But we do have 50-period moving average resistance at 69.67 on the monthly chart, right? Now this support, usually get some type of a move higher from this area of support, right? We've been seeing some type of rebound, so maybe even at that 68.78. So let's drop down to a weekly chart, and we can see that we got quite a bit of space before we run into the congestion zone here. In fact, from 66.60, where we are that's roughly about almost 200 pips, maybe like 140 pips, and possible profit there, right? So just use your oscillators, look for entries in the direction of this trend. This is a strong, we've got several green bars, very strong, right? Any pullback you get on the lower time frames will be beneficial for an entry. You can see, look at the RSI is clearly above 50 on multiple time frames, and just turning up on the 4 hour, which is their dealer charts, and their 2 hour. You go down to 1 hour, still looks pretty bullish. So I am definitely I'm going over the top right here. I am buying the market right here, right now. Okay, there you go. Probably not at the market. I would look for a pullback. I want to get the stuff on the cheap, and I drop down to maybe a 5 minute or 1 minute and look for a pullback there. Okay, let us keep on trucking through through what's going on here on our economic calendar. And the next flag, we did go through the euro with the Australian dollar, with the pound, and that really kind of winds us up for that, right? We could look at, let's go ahead and take a quick gander at the SPX 500. It's climbing a wall of worry, and we can see maybe from our weekly chart that we've reached a new 1 year or 6 month high or something like that. Yeah, our high of 2023 in July. So in August, September, October, November, December, 5 month high. So we're approaching that 5 month high, and we have, we're breaking through areas of resistance or approaching it. We have the 46.38, the high from March 28th, 2022. But this big high up here is what we're looking at, 48.17.30 back on January 3rd, 2022. And that's look like where we are moving. We made a low at the 50 period moving average. We are currently above the 50 on the RSI, which is bullish. And then our daily maybe we're approaching we're in the oversold area, but just because it's oversold does not mean it's a sell. Prices remain oversold for a longer period of time. Think of it as a thermometer. The thermometer only goes up to 80 degrees, but if the room is 100, it really doesn't matter. The thermometer will still bubble around 80, even though the room is at 120, right? Remember, these banded oscillators like stochastics and RSI are banded between, and they have a limit. So when price starts making new highs, well, the limit can't measure what's actually going on. So it gives you false sell signals like we have back here. False sell signals with price going up. And if you took a sell here, you got crushed, right? So don't sell just because an oscillator gives you a sell signal. And those are little things that we teach like in mentorship, in our courses and things like that. We give you that information. We have a two-way communication, and I can mentor you and work with you. It's hard. You can't work with just a video. A YouTube video doesn't answer your questions. And yeah, even though you might post a question in the comment section, and if that person happens to be online, and if that video is not 5 years old, you may get an answer from someone, or you might get a bot that gives you give them money, and you lose money, right? So that's typically, so if you want relevant, active information that you can use to train you as a serious professional trader and not just some hobby-seeking amateur, then you want to go to EliteTradersUniversity.com, check out our masterclass. It'll be a pop-up that comes up for you, and then you can sign up for that free masterclass and learn how my system works and see if the opportunity is right for you. Don't miss out on working with myself. I am a 30-year veteran. I work for the largest Forex broker dealers and the biggest names in Wall Street. And I'm looking forward to helping you become a success in your trading. Okay. So I'm going to take a look at one of my favorite assets I like trading right now. And unlike all these other assets, it's going directional, and that's gold. And we're going to go to the symbol XAUUSD, and maybe repeating some of the stuff that I've given to my private gold rush blueprint members, but I'll give you a little taste of it in case you are interested, and I'll put a link in the description if you want to be part of the public release of the gold rush blueprint. We already have people making thousands of dollars using the system, and I even told people about gold breaking out to new highs based on this technical, quantitative, and sentiment analysis that I've been sharing with people. In fact, let me go ahead and share the sentiment analysis I have here. I shared with them in this private meeting that I had using my market heat map and the sentiment index. And we actually took a look at of gold sentiment, and this measures looking at the retail traders who trade gold. And right now, 65.75% of the traders are short gold. Can you believe that? And you think, oh wow, if everyone is short gold, and in my Discord group they're short gold, and in my Yahoo group, and in my Instagram group, and everyone's short gold. Well, they're wrong. 90% of all traders are wrong. And so this is a really great indicator because it shows you where the smart money is positioned, right? So if all these people are short, well, guess what? The few people, the losers pay the winners. So if you have more losers on one side of the trade, then guess what? The 34.25% of the people who are long gold will get paid. Okay, it does not be a contest. It's more like an election from like 2000 and I won't say. We all know what election I'm talking about, but where you have more votes, but going in the wrong direction, right? So, but you might say silver. Well, look at silver. Well, silver is called poor man's gold, and everyone thinks that silver is going to rally because gold is rallying, right? And so people think that eventually there's going to be this narrowing of the spreads between gold and silver. But the thing about it, if everybody's in it, it's not going to go up. It only goes up when everyone gets out of it, then it starts going up, right? So all these people are long silver, and notice that silver hasn't gone anywhere, right? So the people who are short silver are making money. The people who are long silver are not making any money. The people who are short gold are getting crushed. The people who are long gold are getting paid. So this is called sentiment analysis, right? I know people use COT, and there's some guys coming on, but remember, COT is updated only on Mondays. This is updated every day. And so it's more current. It's based on the Forex market, not the futures market. The futures market is so much smaller than the Forex market. The Forex market is $6.1 trillion a day. The futures market is several $billion a day. So this measurement of gold is going to be a lot more accurate and more relevant and more often than the COT. I know COT, somebody might hear, oh, I want to read the COT, I want COT. Why do you want to read something that's totally inferior? It's old. The data is updated, it every 7 days. Do you want 7 days? Yeah, I want to learn COT. Do you want something that's updated I want to learn COT. Do you want to learn something that's only updated 7 days? They're not hearing. It's like you're saying you want old data. So well, okay, you want to learn COT? Well, here's COT. You want COT? I'll give you COT. I'll give you COT. You want COT? I'll give you COT, right? But do you think it's going to help you? I don't think so. Why? Because it's late. But no one listened, and that's why 90% of traders lose. Well, the other 10% are doing what the crowd and masses are not doing, right? So you can come over to cmegroup.tools, quick strike, and here is COT. And again, it is updated how long? Every 7 days. So guess what? Look, if I'm lying, look, 17th, 24th, 31st, every 7 days, right? So do you want 7-day old data or do you want current data? Well, I want 7-day old data because I saw it on a YouTube video. Well, there you go. I have nothing to say to you. I'm giving you what you want. Good luck with it. This stuff doesn't work. I told you it wouldn't work. Why did I post it? Because it's for futures. We trade the spot. We trade the actual price at the current price. That's called it's called spot. Spot on. Futures, future in the future. The futures price of gold and the spot price of gold are different. The futures price of euro and the spot price of are oftentimes different, right? Yeah, I only work for a brokerage. That's all. That's my only claim to fame, right? So this is the dealers, and we can look at gold, right? I mean, this is for my friend that kept insisting, and I'm like trying to tell them. And that's why, in marketing, you got to give people what they want, not what they need, because they think they know what they need, and they're not going to buy what they really need. They're going to buy what they want. So I sell you what you want. I try to give you what I think you need, but you won't buy unless you want it. So I sell you what you want, okay? And that's what people are doing for you. They're selling you what they want, not necessarily what is good for you. And you say, well, I know what's good for me. Well, I don't know how you could if you never traded before or you have not been successful at it. Then anyway, that's a whole different story, a whole different rabbit hole, right? So there's your dealers, right? And the dealers are what? Why are they short? Because they sold to you. That's why. Right? So again, so look at the dealers on gold. The dealers are all short gold, right? They're short gold because they're selling it to you, right? Managed money, though, is long gold, right? Why? Because they're buying gold for their clients and they're making money, right? So in this case, this data came out on the 28th. You're not going to get new data until the 4th, right? And then after that, you're not going to get more data until the 11th. Meanwhile, sentiment index is updated daily. So just showing you the difference if you ever wanted to, if you start getting fixated and then someone tells you, hey, I'm an ebook on COT. Well, what a great idea. I have a book on COT for you for this $9.97. Just let me know in the chat box. Anyway, moving back. So going back to gold. Okay. So we're looking at gold here, 2071. We're going to move out to some old highs here. Higher highs, higher lows are we're looking at. We're above the 50 period moving average, so we're moving up moving up like George and Wheezy. We're above the 50. So no, what do we say? No, well, I mean, this thing is, this is
Bye.
we're shooting up those bears. Okay, there goes the bears, right? So that's what we think about gold, right? It's going through the roof. And so we broke out of this. We're breaking out of this bear flag that we've had for a number, it's not too long after we had two JP Morgan gold traders thrown in jail for currency manipulation for the past 10 years or 8 years. And now gold is actually breaking above some old highs right here. And it's like, well, every time it's come here, Greg, it's dropped, but 4 times is not, 4 times the charm, ask one of Liz Taylor's husband. The fourth break, we've got what we call a bull flag, right? We have this bull flag taking the high and the low, right? And I'm going to be a little more liberal here and look at this and then take this low right here and then project that out from the top, right? So we take the high of the flagpole, project it out, and now you're looking at about $3,000 an ounce, right? So not only would I be a buyer of this, I would actually buy some physical, because you imagine if you go back in time, back to the 1990s, where we had inflation, and we had this consolidation. We didn't get over 300 for a long, long time. In fact, it was a guy who's come on TV, and he was a gold bug. He was like, "Oh yeah, gold's gonna go up to $2,000 an ounce." Well, he died. I remember the day he died, and I was like, "Oh my God, he died." And he never ever got to see gold go up to this price. It's like he talked about one day gold's going to get up to here, and it never did, right? So here it is, right? So it's not like currencies. If you look at a currency like USD, it really hasn't gone anywhere in the past, few years, right? We've been moving really. We've been here. And we've been the high of like 160 and low maybe 52, and we haven't gone anywhere in value, right? You go to any currency pair and it's going to be roughly the same thing, right? We really haven't gone anywhere because currencies are really locked in some very massive ranges, right? This is the range. Maybe it's a little bit bigger on the pound because the pound was like always valued. It was the reserve currency of the world, so it really hasn't gone anywhere in decades. Really hasn't gone anywhere. And we really haven't, this moved sideways. It hasn't gone anywhere. However, commodities like gold have just gone, in a direction that's up. If we go back to gold, XAU-USD, we've been spin, right? Another one that's gone up like this is like Bitcoin, right? If you look at BTC USD, right? So, I mean, these are actually stores of value, and you can see that, yeah, I mean, it hasn't gone anywhere here, but you look at where it was to where it's at, it has gone up faster. You can't buy a euro and get this type of return, right? So that's the great thing about having not just digital gold or electronic gold, but also taking some physical as well, right? So with that, I want to thank you for. Now this is our Gold Rush blueprint, and it's very simple. It's like, okay, green is up and red is down, and we got B for buy. Someone asked me, "What, Greg? What does the B stand for?" I'm like, all right, okay. All right, you're just playing with me, right? And what does the S stand for? Oh, you are playing with me, right? I said I was very patient. S stands for sell, and B stands for buy. I don't know how easy that is. Okay, but what can I say? I want to thank you so much for being part of our session today. Come over to Elite Traders University. Come over to my market heat map. check out what we have here. Reach out to me, Greg Elite Traders University, if you want to find out more about what we offer as far as training and help you to become a profitable trader. We've got traders all the time passing prop challenges, and that's what we help people to do. And we have great terms right now for people who may not have, goo gobs of money, but can pay, no monthly payment. I'll take a monthly payment from you because I know that you're going to make money, in your trading, and you can pay it off, right? So I'll take all the risk if you're willing to take a risk and invest in yourself. Okay. So I'll talk to you soon. Well, my name is Dr. Greg McLeod, Elite Traders University, and I wish you much peace, success, and prosperity, and happy trading. Cheers. Bye-bye.